Hello and welcome to AviaDev Insight Africa, the podcast offering a window to the world of African aviation with your host, John Howell, CEO and founder of AviaDev Africa. Today, we're going to be previewing a topic that continues to dominate discussions around route development in Africa, namely access to finance, especially from an airline perspective. Joining me to discuss this is Tristan Brouard, who is the Vice President of Asset Management at ACC Aviation. They are a global leader in aircraft leasing, offering transaction and consultancy services, and the team has got a broad range of global experience and is one of the largest in its sector. And we're delighted to have a long-term partnership with ACC. Now, Tristan himself will be hosting a panel at AviaDev in Zanzibar, and in the build-up, we've created an insightful blog post to accompany this podcast. So you can access that and have a read. You can either pause now and pull that up through the show notes, or you can have a read afterwards. And the aim of this podcast is obviously just to provide a bit of context around the blog post. So welcome to the podcast, Tristan.
Thanks very much, John, and welcome to all of our listeners. Looking forward to the discussion.
Yeah, me too, because it's been a topic that is so dominated the conversations when we were putting the program together with the advisory board. There's more and more leasing companies of all shapes and sizes, financing institutions, coming to the event because, of course, we have the commercial entities from the airlines joining the event as well. So where I want to start today really is just to get a real helicopter view, basic understanding of the current environment for aircraft financing for Africa. Is it improving? Is it still difficult? What are the major pain points? Just give us a bit of an overview.
So I think the African aviation environment is an interesting one, and it's a very juvenile segment of the market. It's at a pivotal but critical stage. There is increasing demand for stronger inter-Africa connectivity. There's a lot of long-term growth potential in Africa. However, acquiring financing an aircraft is an extreme challenge. It's a good idea to define it by dual reality. On one hand, there's a lot of opportunity for fleet expansion and growth in network and in metal. However, on the other hand, there's structural constraints in financing, and that could be a limited access to capital, higher cost of borrowing, regulatory and legal uncertainty in the market. And then another topic that seems to come up is the reinsurance requirements and tax hurdles that keep changing throughout the market.
Yeah, I think that's a really important point. And we will come in and dive a bit deeper on this. You talk about the opportunity. The challenge here is, of course, it's a global market for a certain finite number of aircraft. And therefore, you've got to be globally competitive to be able to attract that lessor, that finance. And there are some different solutions that we're going to explore on the panel, but also that we're going to explore today. And what I asked you to do with the blog post and what we agreed was, let's really give those who are relatively new to the aircraft financing side a bit of an overview of what the options are. So can you talk to us about the different forms of either acquisition or leasing that are available to African airlines and those that are most common?
Sure. So I think you got to look at the usual options. And just like anywhere, Africa falls into three broad categories. One is ownership, whether that's through outright or finance. And then there's the dry lease. And then there's the shorter term wet lease or ACMI solution. Outright purchasing is often used by a handful of airlines that have a strong balance sheet, that have the capital they can afford to expend on metal acquisition. It is the more favored solution between the airlines in Africa at the moment. And I think it's just because of its transparency and ease of forecasting costs throughout the airline. Then the two sort of less common, but they are emerging, is either a finance lease or an operating lease in Africa. The finance lease is similar to an operating lease, except you have the option to purchase the aircraft at the end of the lease term. And there's certain mechanisms throughout the lease agreement or the financing agreement that airlines need to adhere to. Operating leases or dry leases are sort of the more common of the leases. And these are often where an airline takes in an aircraft for a specific term, and they have to return that aircraft to the lessor in a prescribed condition. And this is where a lot of airlines have challenges forecasting and making sure that they have the capability and the resources to return that aircraft in that condition. Another solution that we're seeing emerge for airlines in Africa is the ACMI or wet lease. And this is sort of vital to smaller or startup airlines that have established themselves in a market but need to rapidly expand due to demand or aircraft shortages. I think the ACMI model is, also driven by season. So, airlines can induct on a shorter term than your operating or finance leases and your high expenditure outright purchase. ACMI does come with a slightly lower upfront capital expenditure, and that's why the African airlines are sort of adopting this model, although there are still some challenges, regulatory challenges being faced by the airlines.
Yeah, the ACMI growth has been incredible in the last few years. I saw this coming just before the COVID pandemic, and then afterwards, more and more airlines are jumping in here. And it does have a particular benefit. We've discussed it with some of those ACMI operators on the podcast before, that of course, if you're placing aircraft into Southern Africa, Sun Express have got a partnership with SAA, for example. They're a Turkish-based airline. They don't need those aircraft in their winter because it's not high season. They can deploy them and do an agreement with SAA, and SAA gets an extra fleet in its high season. So it's about matching the two things. Now, the challenge with all of this, which is where I want to come to next, is that finance side. Because some people would say, well, it's like renting, right? Like you're renting, you're never really building your balance sheet. I can hear Roger Foster's voice in the back of my head talking about balance sheets, and that is really important, because if you don't have assets as an airline, you do want that to be a better bet in the financing industry when you say, well, I actually have assets and I'm worth something, as opposed to I'm operating month to month and what's coming in is going out on lease agreements. So I want to talk to you quickly before we dive a bit deeper into the different types of finance, because you touched on obviously acquisition. That could be a brand new aircraft, or it could be a used aircraft. And obviously on a brand new perspective, it's normally state-owned airlines be doing this, because we're talking hundreds of millions of dollars, which of course a startup airline doesn't tend to have. So talk to us about some of the finance. Where can they go and get the money to get these assets?
Well, I think the positive thing is that there are a number of solutions for airlines that need financing. And as you mentioned, financing comes with a lot of exposure to the airline, and they need to understand that. And that then derives on where they should go and seek the financing. So you can start with, if it was a brand new aircraft, you could look at export credit agencies. These are some of the more favorable financing solutions, although these do need a very strong backing, whether that's sovereign or credit credentials in the airline. Then we've got commercial banks, AXA, Investec, Nedbank in the region, as well as some other smaller commercial banks that will look at this. But again, it all comes down to being able to disclose your financials. This is a challenge that we will touch upon. It comes down to the ticket size. Most of your commercial banks are looking at $10 million plus. And then also the strength of the asset is an underlying addition to the financing. Then you have development finance institutions, which are slowly starting to play in the market. But this is normally a blend between financiers that will provide the financing. Sort of less critical, because this will be your junior financier that will step in with a commercial bank. And if the commercial bank is past credit, normally DFIs or development financial institutes will have a look at sort of the residual loan payment that needs to be paid. We are also seeing very small non-bank lenders, private investment funds that are stepping up and taking the plunge into aviation, which is good. Although not really focused on the market, they are starting to venture and dip their toes into it. Another interesting one is the OEM finance arms. So Boeing and Airbus have finance arms that they can do this with. And then the other common financing option is to do a sale and lease back, which unlocks a bit of capital that's tied up in the asset, and they can use that available funds to purchase additional aircraft or put deposits down on lease agreements and stuff.
Yeah, there's loads of options. I think some are more open to certain airlines than others. The other one that we've seen in Africa, which I think is really interesting, is the whole kind of share acquisition side. Qatar getting involved with Airlink, obviously talking about Rwanda as well. There's talk of Qatar being involved in numerous state carriers. Obviously, Ethiopian do it slightly differently, but they've also got sort of ownership, and then they can provide assets into that airline. But this is more something for an established airline, right? This isn't going to happen necessarily straight away unless that airline has got something specific that the bigger party wants access to, right?
Yeah. Correct. Yeah. It has to be a well-established airline. And I think if we have a look at the likes of Airlink in Qatar, I think you mentioned that Roger Foster's got an extremely strong balance sheet. And that's what I think drove Qatar's desire to be there.
Yeah. And a very complementary business model as well, which makes a lot of sense. Interesting that you mentioned, because of course what we're building at AviaDev is this marketplace. It's route development, but we've definitely adapted that the last few years into also network and fleet development. Alongside the airlines that are attending, we will also have a lot of the banks you've mentioned. So ABSA, Investec, Nedbank will be there. We have AfriExim Bank as well, coming from a development financial perspective. You've got members of the AFRA, the African Airlines Association as well. They will be there. And so it's about starting to facilitate these conversations, because we are seeing some really interesting private sector and public sector growth in terms of their creativity, I think, when it comes to leasing financing. So I think the obvious question this begs is, what can those airlines that are attending AviaDev, that are starting up, that are midway through, that are looking to expand, what can they do to make themselves more investment friendly and build that trust with the lenders, with the lessors as well? And obviously, when you're speaking with them, to make them a better bet when you go to the market.
That's a good question, John. And I think a lot of airlines seem to have the basic understanding of what needs to be done. Strengthening the airline's financial transparency, I say by that, is audited financials, cash flow visibility, and clean corporate structures. These are key areas that a bank or a financier will look at before they'll even consider giving out a term sheet for financing. Another aspect is you have to have a professional planning strategy. You can't be a turboprop operator wanting to expand it to wide body operations. It's just not going to work unless you have business plan, financial models, and commercial strategy to back that expansion plan. Regulatory compliance, whether that's got to do with Cape Town Convention, or whether that's got to do with maintenance standards and other safety standards that might be applied, and that goes in hand with saying the more transparent and trust you build with the financier or the lessor, the better. If you've had a repossession or bad financial year, that doesn't mean your airline is done. A lessor or a financier will look at that and ask questions around that, especially if it's been a couple of years since that sort of event took place. They'll have a look at how you have remedied that situation and how you mitigate that from happening again. I think the most important thing, as we've mentioned, is trust and engage early. The earlier you engage with your financiers, your lawyers, your commercial team, better the position you'll have. Financiers and lessors need to be seen as partners. They are providing critical equipment to generate revenue. Engage early, strengthen your financial transparency, and engage as quickly as possible with your financiers and build your business with them along, instead of seeing them as an opposition.
Yeah, I think if I was going to put that into two buckets, one is the stuff that's in your control within the organization, within the airline. And the second is the jurisdiction in which you operate and putting pressure on them,
Correct.
but encouraging that for them to adopt things. So just for the listeners that are new to this stuff, the Cape Town Convention, people talk about it all the time. It's been in the news this year because Nigeria has adopted this, and it's really helped in terms of them getting more aircraft in and lessors being more friendly to that environment. How does it reduce the risk for lenders? What is the summary of what it is?
The Cape Town Convention basically regulates movable assets, and it helps lessors with the repossession rights and securities over their assets. If an airline does default, there is certain steps that need to be followed within the Cape Town Convention, and this is how lessors and financiers could, act upon to get their assets out of that jurisdiction.
Right. So it's an insurance policy, whereas if you throw this in, you give an aircraft to an operator in a country that doesn't have that, and then they default, you're a bit stuck. You can't necessarily get that asset out. Therefore, the perception at the beginning of the lease is, I probably have to assume the worst, which is I'm not going to get it back, which means that the rates and everything is higher. I mean, that's just how it would work, right? Okay, fantastic.
Yeah.
And I think the other thing just to pick up on when you've talked about the different financing options, different leasing options, is identifying the best route for you. And this is where you guys come in, right? An airline can sit with you and say, this is who we are. This is what we're thinking. Because it can be very detrimental as an airline to go down the wrong route and engage the wrong lessors or the wrong financial solutions. Is that where you help quite a lot of airlines at this stage?
That's correct. Airlines all know what they need to do on a daily basis, and that's moving their customers from point A to B. They have their ideas on their fleet strategy and their commercial strategies going forward. I think sharing an example of project system is probably the best way to describe how we work. An airline might approach us and say, we need a narrow body. Realistically, getting a narrow body in today's current market with supply chain issues is months away. Their demand is right now, and there's just simply nothing that I can do or anybody can do to get an aircraft right now into their operation. So that then goes down to the ACMI side. We can fill that gap with ACMI pretty quickly. And then when it comes to leasing or acquiring an aircraft, that's a more longer term strategy. We sit down with the airline. We have a look at how they want to acquire it, why they want to acquire it that way, and whether their financials and everything tie up in order to acquire the aircraft in the manner that they want to, whether that be on lease or dry lease. And then the acquisition, making sure that they have not only the capital to buy the aircraft, but then to continue their operations after they bought the aircraft is the most important thing.
Yeah, and I just think it can't be underestimated going down the right route. We did a podcast a couple of weeks ago with an insurance company, and they were saying, it's about getting your ducks in a row at the beginning. Don't just go into the market with a very vague and not really sure what you need. You've got to start, and that's where engaging a partner that can actually sense check, your solutions, because as you said, an airline can be excellent at the operation and need some support on the commercial side or vice versa. And just getting an outside opinion, or like you said, they say we need a narrow body. You're like, I'm going to source that. But in the interim, we need to source a solution now. So let's get a wet lease in for a short period while we're inducting something a bit more long-term that's more affordable in the long run, and just make sure that the balance sheet is as stable as possible. So I think before we leave, because I'm really excited for the session, you've got some really interesting panelists on there. We've made sure it's a real mix, but just to look into the future a little bit, in terms of where we're going here, we're seeing that aircraft manufacture is ramping up slowly from Boeing and Airbus, etc. But the demand and some of these new airlines that have started up, that have placed these huge orders, the backlog is absolutely massive. So do you see a continued struggle for the next sort of 5 years for African airlines getting these? Is there going to be like a secondary market they can access? Is the ACMI model going to continue to be really strong? That's kind of my thinking on this, but you're the expert. So what do you see the diagnosis for the next few years?
Well, I think everywhere's going to struggle. However, I think in Africa specifically, we are seeing some smaller green shoots of transformation. In the short term, fundamental constraints being capital scarcity, aircraft availability, and risk appetite is going to last for quite a while, especially with the gap of available aircraft and affordable financing. It's going to slow that growth. However, in the medium to long term, I think ACMI is going to continue to grow in the region. More and more airlines are exploring, not just exploring it, they're actually inducting it. As you mentioned, SAA and Sun Express. There's Air Senegal that leases. There's many others that wet lease in Africa. The positive thing that we are seeing is that there's more and more local or regional providers starting to emerge. The likes of ALS, SEME, these are sort of strong contending ACMI providers in the region. In terms of access to financing, like I said, it's going to be tough, but I think blended financing solutions, and once an airline gets their balance sheet strong enough, I think we'll have external investments. We'll see more of the Qatar Airlink and Qatar Rwanda Air mergers happening. So it's quite interesting to see how the financing stuff is coming through. I think, in summarizing everything that we've spoken about, in aviation's financing future, I think hinges on partnership. I think that's the biggest that I'd like to use, partnership, and that's between airlines, lessors, financiers, government bodies. And that's only built on transparency and shared belief in the continent's growth.
Yeah, great summary. The thing that's so encouraging for me is that the event, AviaDev, in a couple of weeks, it's been really well supported by the leasing community, by the finance community. If there wasn't interest in this market and they didn't see the opportunity, these people wouldn't be there. And so we're seeing that very much. Nobody can ignore the population growth, the rising middle class. One of the things that you definitely brought up that I think is fascinating, that is a trend, is the African airlines that were airlines becoming ACMI providers themselves to other African airlines or global airlines. I mean, you mentioned SEMAir, they will be at AviaDev, ALS will be at AviaDev as well. And of course, traditionally, SEMAir was a scheduled airline in South Africa, and now it's leasing aircraft all around the world. And people listening to this may be surprised by that, but they've become an ACMI provider globally, which I think is a real sort of African success story that isn't told, massively. So I think these are the opportunities when you talk about partnership, is actually we can work together within Africa to redeploy these assets. We don't always have to go outside. For some airlines, that's what you need. That's the way you're going to go. But there's so many options, and that's what we've covered today, is the different ways that people can finance. On your panel, you're of course going to have Miguel, the CCO of TAG. They've just started to get in their 787 Dreamliners from Boeing. They did sale and leaseback. They've worked with AirCap. They've worked with Boeing Finance. There's loads of different ways that they've done things, and they've got 220s as well. You've got Chapman Freeborn, Raphael Haddad, who is a broker and acquirer and also a lessor as well. Then you've got Richard from True North, who does a lot into the African market too. And of course, last but not least, Mr. Berthe, who runs the African Airlines Association and is driving a lot of this conversation around development finance, around partnership and collaboration. So I'm really excited for the panel. I think it'll be really interesting. And I'm sure you agree with that. You've got some good questions planned, I hope, Tristan.
I've got some pretty good questions planned, and I think the audience will walk away from the panel discussion with some new insights. I'm a firm believer of that.
Amazing. Well, thanks to you and the team for putting together the blog post. As I said in the intro, you can go to the show notes and just click there. It will take you through to the website so you can have a read of the blog post. It's really informative, and it obviously complements what we've talked about today. We're looking forward to obviously having the ACC team with us. I think you go to more events than me, which is great. And you've been big supporters in the African market since I started almost 10 years ago. And yeah, everybody out there listening, if you did enjoy the podcast, do hit that share button, share it with somebody in your network you think would benefit from having a listen. Subscribe to the podcast so you don't miss another one. Thank you again, Tristan, and we'll be back for the next episode very soon. Take care. Thanks for joining us.
Thanks very much, John.